Hey, this is Jake Hoskins. Thanks for tuning in. In this video, I'm going to be going over some basics of ETFs, exchange traded funds, and I'm going to be giving some different situations for when you would use a single stock versus when you would buy an ETF. And hopefully this guide will make your investing life a little more convenient. Before we get started, I would really appreciate it if you subscribe to my channel, and I'll be giving you more content like this in the future. So let's talk about some of the main features of ETFs and how they're different from single stocks. So a regular stock is just a share in a single company, whereas an ETF is a bundle of companies, kind of like a mutual fund, but you can trade it on an exchange just like a single stock. Single stocks are going to be a lot more volatile than ETFs because ETFs can have a bundle of 10, 50, 100, even 500, or even more than that companies that are included in that one ETF. So basically that diversification within the ETF really smooths out the price performance of the ETF, whereas a single stock is going to go up and down a lot more. It's going to be a lot more of a rocky ride. And then single stocks you just buy directly on the stock exchange, and ETFs you buy on the stock exchange too, but they're managed passively by financial firms that put together that bundle of companies for you, and they charge you a really small fee, but you can still trade them on the stock exchange just like regular stocks. Now let's talk about some situations where you would use a stock versus where you would buy an ETF. So single stocks have a higher return potential. They also have a higher loss potential. A single stock is a lot more likely to go to zero than if you have an ETF of 500 companies. For the ETF to go to zero, all 500 of those companies would have to go to zero at about the same time. So the likelihood of that happening is very low. But vice versa, a single stock can go way up as opposed to an ETF, which is probably not going to go very high up in a short amount of time just because there are so many companies bundled inside of it. So basically single stocks have higher risk return potential, where ETFs present less risk and less volatility. Another situation where you would want to use an ETF is where you want to bet on a category or bet on a sector or an industry or a theme as a whole, as opposed to a single company. The reason you would do that is just because you think the industry as a whole is going to really be productive, but you're just not sure which company is going to be the clear winner, and there may be no clear winner at the moment, but you still want to be in that industry. Of course, if you believe there is a clear winner or two or three clear winners in that category, you would just buy the stocks of those companies and you wouldn't really mess with the ETF. You would use an ETF if you wanted to be more passive in your investing approach. ETFs require much less research and much less knowledge than a single stock would. A single stock, you really have to be confident in your research. So ETFs are really nice when you want to just get easy diversification, easy exposure to a single sector, and you can do more passive investing with ETFs as opposed to more active investing with single stocks. You should consider using ETFs if you're just an inexperienced investor. If you've been investing for less than a year, you've been studying the market for just a short amount of time, go with ETFs to start out because they're not foolproof, but they're a lot easier to deal with than single stocks. ETFs are like having the gutters up when you're bowling. You're never going to throw a gutter ball like you would with a single stock and lose all your money. So when you're first starting out, I would definitely recommend at least going with mostly ETFs so that you don't take that one big loss and get discouraged or ruin your portfolio going forward. And even if you're experienced, ETFs are a really easy way to diversify. You can buy one fund and instantly have exposure to dozens or even hundreds or thousands of different companies just with one share of that ETF. And you can bet on different themes and sectors, and it makes it a lot more convenient to organize a portfolio based on different allocations that you would want. I mentioned before that there are financial companies that organize these ETFs. They bundle the companies together into one fund and they manage it for you. And so some of the main companies that you want to buy an ETF from are Vanguard, State Street, Van Eck, iShares, which is ProShares, Fidelity, Invesco, and ARK Invest. Now, those aren't the only companies that offer ETFs. There are actually a lot more companies that offer them, but those are the ones that have been around for a long time and they really do a good job, and they charge low fees and they give you really quality ETFs. Before you start making a portfolio of ETFs, or even single stocks for that matter, here's some tips before you get started. Sit down and write out the themes or the industries or the sectors that you're interested in. Google them, do a lot of research on them, and then once you've identified which ones you're interested in and which ones you think are going to give you the highest returns over time, write those down and then assign the allocations, the percentage of money that you want to put in each category. And that starts you off with some good guidelines to stay diversified. The next step in your research is to check the top fund holdings, and this is a really easy thing to check in most ETFs. It's really quick to do on Yahoo Finance. Just go to the ETF that you're interested in and click on holdings, and you can scroll down from there and you see the sector weightings, and then you scroll down further and you can see each individual company that's in the ETF along with the percentage allocation. And then to the right of that you have the fund overview. You can see category. This one is large blend because it's the S&P 500. You have what company it's from, in this case State Street. Net assets, so total money that investors have put into this fund. And then you can see the return and the dividend yield. And then the most important thing is to read the fund summary. Read it carefully, because there's a lot of ETFs that can do some weird financial things. Some of them can be levered 2 or 3 times. Some of them can be short funds, which means that they are inverse to the market. So you want to read that fund summary carefully to make sure you know what you're getting into before you invest. Another important thing to make sure of before you buy an ETF, check on the expense ratio. It needs to be far less than 1. Ideally, it would be about 1/10 of 1%, 0.15, 0.05%, something like that. Some of your more specialized ETFs will have expense ratios of 0.5%, 0.75%, but it should never be more than 1%. If the expense ratio is more than 1%, just don't even fool with it. I hope I was able to inform you a little bit about ETFs, maybe make your investing life a little bit easier as to whether to go with single stocks or ETFs. Like I said, ETFs are a really good option if you want to get some quick and easy diversification, or your investing style is a little more passive, you don't want to do as much research, or you don't want to take as much risk. That's perfectly fine. ETFs are probably for you in that situation. They're low fee, they're really easy and convenient, and they're a great way to get low risk exposure to different themes and sectors. But before you buy, make sure you go through an exhaustive research process about different sectors. There are so many different ETFs out there. There might be more ETFs than there are actual companies, actual single stocks. Whether it's an S&P 500 ETF, whether it's a electric vehicle ETF, a space ETF, whatever theme you can imagine, there's probably an ETF on it. So really do some good research and really dive deep to see what ETFs are out there before assigning your allocations and making your investments. But once you do that, there's very little maintenance involved with a portfolio of ETFs. I hope you found this video helpful. If you did, give it a thumbs up, and leave a comment if you found an ETF that you're wondering about, or comment your favorite ETF that you own. And go ahead and subscribe, because that really helps me out, and I'll be giving you more content like this to help you with your finances. Thanks.